Good to see many of you. I feel bad for some of the guys who left, but we'll deal with that later on. The morning session has been actually even quite interesting for me. Sometimes consultants overrate their knowledge, and it's very good to often hear clients outside the client's offices or technology guys. But yeah, it's been a good session. I'll do a quick summary of some of my thoughts at the end of the day today before we close out. We obviously have our next panel. It's panel number 4, which is payments, wallets, and NPSS, road ahead. I'd like to obviously first invite Ram, and Pankul. You've seen these guys before, so I won't do any introductions. And I guess, Ram, you're going to be introducing your panel? Okay, thank you.
Good afternoon. Hello. All right. Take a seat, Pankul. We have a very interesting session now. Without further delay, let me invite my panelists, fellow panelists, to the stage. Nitin, my first panelist, Nitin, as we all know, is the COO at Masraf, but previously he started his career with Citi. He was an ED at Morgan Stanley. He held global technology functions at Barclays and JP Morgan and was a CTO at Mashreq before his current role. Nitin, thank you for joining us. May I invite Sean Langton, Group CIO, ADCB. 18 years at Bank West, before this part of Commonwealth Bank Group. And some interesting insights we're going to have from you, Sean, today from your experiences of what we had to see in your stint there from Australia. It's interesting perspectives there. Sean comes with about 28 years of experience, banking, technology, and fintech. And he also had roles in ING Barings and Wix before this. My third panelist, Pankaj. Pankaj Kundra. Pankaj is SVP and GM, heading acquiring at Network International. So, mind you, we have 2 ex-Mashreq people on the stage. Pankaj was also head of payments, personal banking at Mashreq before his current role. And prior to that, he was also with Citi, where he head the card business. So, we also have 2 Citi bankers on stage here. I may also invite Dheeraj Guy. Dheeraj is a subject matter expert at TCS. He actually specializes in the space of payments at TCS Banks. Dheeraj has worked for about 25 years in the technology industry, and we are looking forward to hearing from him on some subject matter reports on payments. With that, I also introduce my fellow co-moderator, Pankul Verma, and I would be a co-moderator as well. So Pankul, maybe I'll go with the first round of questions, and then if I fall asleep, then you need to save me there. But why don't I start maybe with you, Nitin? You actually have been driving, am I audible? Yeah. With a lot of transformation programs, some of them we work together, and some of them particularly in the payment space, right? Now, there is a lot happening, I guess there's particularly in the payment space, what we see now in the last few years. In the GCC and more particularly in the UAE, we see a lot of, let's say, developments, and it has implications on what banks have to do. So what would you say, how would you view these developments, and what would your take on them be?
This is the first question after the lunch, so I'll start a bit. So yeah, you're absolutely right. There's a lot of transformation that's taking place in payment space. And if you look at, there are a lot of fintechs now. From the journey I started, it was 32 years in banking, and that time it was more like a batch, flat file. At best you could just put an encryption or K values or whatever. From now it's all real time. But I want to categorize it into two key sectors. One is retail and corporate. There are 2 different, real categories. Retail, there's a lot of development. You can see fintechs coming in. It's all about speed. and accuracy of accuracy is anyway now given. From old time when you were focusing on accuracy, more than speed of transaction. Now retail is like all about speed. But if you look at corporate side, there's a lot of compliance angle to it. And if we start looking at more complex a transaction, obviously this value-added services coming from the banking side, which is kind of become the bread and butter. So I really thank the compliance landscape to keep the banks in business. Otherwise, fintechs would have taken the dessert and the lunch as well. So in a way, we do look at the transformation into speed, into accuracy, and all the offshoot of that. You talk about data monetization. The way we banks or even service providers are looking at how do I understand the data and how do I sell across. So that's kind of transformation which is coming in now. So all the other things are given. This is now I see a trend. So how do I monetize this payments data?
Interesting. And speed versus accuracy. I think that's
not versus. Actually, now it's become, earlier it was accuracy and speed. Corporate side, you can still say speed, yes, but there is a cost as well, right? The overhead of making sure that it's a proper compliance. A lot of paperwork in the corporate side. So I've moved more into corporate, and Pankaj will remember from the Mashreq days, it was more about accuracies and speed, right? Compliance is embedded. In corporate side, it's or trade finance, and it's still payment heavy, but still a lot of compliance and reporting and all that.
Thank you, Nitin. And I actually want to come to Sean with the perspective that may be a little outside in, right? I mean, NPP went live 4 years back in Australia, and you were, working for a bank that was you were actually responsible for driving a lot of transformation yourself. So if I was to ask you, I mean, from your experience, and now that we are going through a transformation in UAE today, if you had to call some success factors, right, that really, at the end of it, in hindsight, after having gone through the journey, if you had to pick a few success factors, what would you pick, Sean?
So I think the first one would be patience. I think you said I've been working for 28 years, which makes me feel very old, but I think it was about 20 years ago when I think I had the first conversation around a predecessor to the MPP program. We had an initiative called Mambo in Australia, and it was one where the government had said, industry, go make something happen, but we won't regulate you, we won't impose any and force you to do it, and it went nowhere. And the ingredients were wrong. The participants in the network weren't all incentivized to make it happen, and you could tell every industry conversation about that platform, you knew it was a dead duck from the minute it started. But eventually, MPP was kind of legislated and forced on the industry, and I think it was around 2014 we were building it and working on it. 2018 it went live. The real innovation has only really happened in the last 2 years in Australia, where you've started to see fintechs emerge and true payment innovation, consumers starting to use it, and the rapid decline in cash. So I think you definitely need patience as a key ingredient. I think you need collaboration. It's got to work for all participants. There's got to be something in it for consumers, for banks, for fintechs, for merchants, for governments, for regulators. So there's a lot of parties that have all got to work together to make these sort of big industry, kind of economic infrastructure pieces kind of come together. And that, I think that's a factor in
laying the rails for what could actually happen as a journey towards cashless.
Yeah. So I think you need patience, you need collaboration, and then you need the innovation. So I think, again, in Australia, there's quite an active fintech scene, maybe not quite as big as the one here in Dubai, which is huge, but you need to have, regulations and the ability for new entrants into the market to participate in the payments networks, and then I think you see the true innovation and the move towards digital payments and cashless. But it takes certainly takes a lot of time. I think the other factor, which hopefully isn't repeated, is the pandemic and just external events that can come along and just kickstart digital payments. And yeah, that was just another accelerant that meant that everyone had more desire to adopt it and move away from cash and start to not do the physical handling of paper and coins.
Interesting. So you need to be patient to get instant payments.
Exactly.
If I may move to Pankaj, and I think I want to shift gears a little bit, Pankaj, and this is about, we spoke about a lot of initiatives that are nationwide, right? But the one thing that actually has been happening maybe subtly and, something which is important is the whole space of e-wallets, right? And let's say retail payments, right? And you've obviously been, working in this space for many years, and you've seen it from a banker's standpoint, from a payment service provider standpoint. How do you see things unfolding in the next, let's say, 2 to 3 years? What do you see happening? Maybe you can give your perspective on what has happened so far and also what you see are likely to happen.
Yeah, sure. The e-wallets are in nascent stage as far as this region is concerned. Let's say UAE, for example, just to make a case here. In nascent stage, there are big companies involved. There is, Emirates has e-wallet proposition. Then, Fab has a paid proposition. Kareem Pay is now gaining ground. So every month when we see the data, we are acquirers for some of these wallets, and we see the data is growing, which means the number of transactions are growing. So adoption is growing, especially in the Z generation, or I would say the youngsters are adopting it much more, than the middle age or the senior people. So I think the future will belong to the e-wallet or any payment method which is convenient, seamless, it is embedded in the transaction, and it provides some sort of loyalty or belongingness. I think those are the key features that are differentiating. Of course, in a market like UAE, which is heavily carded market, all of us have more than 5-7 credit cards in our pocket. All of us are used to Skyward or some miles, some loyalty program. So the shift is difficult, when versus some other countries, or let's say in Africa, where mobile wallets really took the cake, because they were at the right technology at the right time, solving the problem, like Sean mentioned, of heavy cash transactions. So I think it is difficult for these wallets to make space in a saturated market, but there is a lot of focus from these companies. Time will tell how successful they are, but I think early stages for e-wallet in this country.
And retail payments as a whole, do you have a view on how that's going to be in the next 2-3 years? Is it beyond e-wallets?
So retail payments overall is very fast growing segment. I would say that growing at about 25-27% year on year and like Sean mentioned, the pandemic really excelled and really created wings behind it. The e-commerce transactions, for example, are growing at 50% year on year in our portfolio. Clearly shows that the payments industry is thriving. And also a lot of local payment methods that are emerging in the region. Then, the latest instant payment policy that is now going to be live in first quarter. So again, the whole infrastructure, the compliance environment, the alternate payment methods, e-wallets, I think it's a perfect mixture of all these ingredients that are propelling the payments forward. So we see the amount of cash reducing drastically year on year, and an emergence of so many payment methods. So
that's I guess that's also the norm for the next few years, as we have seen. I think it's only likely to increase, and that brings me to you, Dheeraj. And I guess a lot of this is there is another side to this coin here, right? As Pankaj said, look, your number of retail transactions are going up. Let's say the frequencies is actually more. The volumes are high, which means that there is, a heavy toll on actually getting all of them executed at the back end, right? What's visible is what the customer experience is, but what sits behind is making sure all these payments are actually done effectively. So you're a payments hub guru. So why don't you share with us, how does a payment hub really help in addressing all of this here?
I think as we speak, the pressure is already there. The market, the volumes are growing, and volumes are growing from here to e-wallets to everywhere, right? So the pressure is totally onto the payment hub already, right? So, but yes, when you talk about volumes and with NPSS coming in, the volumes will surge immediately, like as I think the earlier panelists also said about in India case, right? The sudden surge was immediately seen. It was kind of unanticipated at that time. So that kind of volume will come, and you cannot leverage the existing frameworks right now, which are like diversified, right? I can process one kind of payment in one rail, other kind of payment in another rail. I need to have something as a specialized payment processing capability to ensure that that goes seamlessly. And as we're talking about speed, we also need to see that that is 24/7, and there are SLAs to be met. So that way, the pressure is more on the payment hubs, and you really need specialized payment hubs for that purpose. The background being, you need to have simplified process flows, right? Simplified process flow would ensure simpler integrations, that being just the way of the process, how things will work, and that's how the payment hubs are coming up in that way. But along with that has to be a technological change, which I think some of us already understood earlier and talked about it, that microservices and cloud is the way, right? Why is that? That basically comes from a perspective that underlying things, the volumes will come with scale in and scale out. It cannot be that, okay, every time you'll have a high volume. But then that's where the microservices and the cloud nativity and ensuring that you leverage that functionalities around will be the key for the payment hubs to work on. So that's there on the perspective of payment hubs. Essentially, I think earlier panelists talked about composability. Obviously, we don't want to tell composability what it means, but there is a granularity required, and that's where the payment hubs are doing right now with API connectivities, right? So that seamless, frictionless will only come when you have granular components, you have something like APIs building up, and with the innovation, you are able to expose that out to the external world. So these are the main ingredients which payment hubs are working today to get that onto that ship of NPSS as well.
Cloud and microservices hold the key.
Yes.
Thank you for that, Dheeraj. Pankul, you want to?
I'll pick up the last point, what you said, Dheeraj, on the NPSS. Now, this has become another important initiative, what each bank has to go through. And taking that forward, I would like to hear Nitin's thought on what are the typical challenges the banks are likely to face while going through the journey for implementation of NPSS, and what do you see the priorities for the banks considering such initiatives which are coming on the way? So, okay, so just kidding.
You had more share of the desert, I guess.
Okay, so see, NPSS is a reality, right? It's the backbone is the instant payment platform, right? You can talk about other services, how do we do it, the QR codes that come in. Other good things that are coming is e-checks and digital signatures acceptance as well. To me, that is probably one of the final stages of going purely digital as well. The challenge for the banks is the existing infrastructure and how do we move forward. And there are already so many IRAID systems existing, country-wise, and then cross-border. There's Buna also there. It's all about the integration and how do I monitor this as well. So key thing would be, when I think of all this, I have to keep a customer in mind, right? And how do I service the customer in the best way possible? There are different fee structures, there are different ways of doing it, different speed. So for bank to, I think somebody mentioned it, to simplify is the key. How do I keep it simple? How do I keep it predictable? And how do I keep it transparent and visible as well? So we are, thankfully, wave 3, so we'll watch and learn as well. But, our volumes are not that much I'm talking from my bank's perspective. But we are part of the journey, and I think we embrace it. It's the right way to go as well. And there are a few systems that will be sunset as well, thanks to NPSS. So we do see better managing of our infrastructure, our service, and also for the customer, it will benefit in the end. So, faster, cheaper, probably.
So the simplicity and the underlying infra, that becomes the key for success of NPSS. That takes me to another area. Maybe we would like to hear, Sean, your views. Interoperability and the real time. Again, these are laid out as a backbone for the infrastructure, and this also leads to the cashless society. So what's in your view becomes imperatives for the banks, and what's your view around taking the infrastructure as a base for success of these initiatives?
Yeah, look, I see interoperability or open standards is absolutely key to innovation. I'll share a bit about my experience in the fintech space, where I worked for a global fintech that was providing payments infrastructure in the transit industry. So a very specialized form of micropayments. And what we saw, we used to love doing implementations where we could do an EMV implementation, ideally using something like CyberSource, so we didn't have to integrate with those nasty banking systems. And we would get really fast take-up in markets that had issued EMV cards, and it was applicable globally. So as a technology provider trying to come up with a bit of innovation and do mobile payments on transit networks, it was a godsend. It was great to have open standards because we could just focus on the innovation. On the contrary, we also had closed-loop card systems. We also had domestic proprietary schemes in different countries. The hardest one I had to go through was in Belgium. They have a scheme called Bancontact, which is very widely used. And it probably took us about a year to get the integration working on a proprietary scheme, whereas typically an EMV implementation could be rolled out in sort of 3 months very, very quickly. So if we want speed and we want innovation, I think interoperability is very, very important. And it's one of the reasons why, as banks and as fintechs, we've got to buy into the global standards, and that's where we'll get the benefit, is we can focus then on the things that really differentiate. And in terms of real time, I think, for payments to really take hold, or any kind of digital payment, it has to have that real time kind of surety. Again, in the transit payments industry, we had specialized schemas that sat on top of EMV that were globally agreed as standards that allowed basically throughput of passengers. So we might be handling peak hour traffic where people are going through gates and having to tap their credit card to make a payment that opens a gate, and you've got to get 100 people through a minute. So you've got to have real-time infrastructure. And what was important there, again, was the industry schemas, the open standards that have been agreed that allowed you to manage fraud, to manage floor limits and local authorizations and various different payment interactions. So I think, fundamentally, real-time's got to be an ingredient for certainly any consumer payment that's happening. And interoperability and open standards, and particularly the more global standards, are going to allow us to tap into that global innovation that's coming out of the tech sector.
So you touched upon the interesting point where underlying infra also needs to integrate well with other ecosystems. And one of the integration points is where Pankaj and team adds a lot of value through payment processors and payment gateways. But the challenging question, what Pankaj I want to put to you, is with a lot of payment processors and payment gateways available in the market these days, and even some of the retailers, big retailers, they are bringing their own payment gateways. So how do you see these two creating an impact into the banking industry and into the other market with respect to the retail payments which are happening?
Okay. I think before I answer the payment processor question, one view on the NPSS success is also the commercial model. It is not clear today that what is the commercial model that is going to come out. And I think that holds the key to its successful adoption by all the banks. If you look at all the large banks, huge revenue pool comes from their credit card, debit card transactions. And if the commercials are not properly aligned, and of course, it is not going to be a mandatory requirement, it's an optional way of making a payment. So commercials hold the key. And I think all of us in the ecosystem are eagerly looking at that commercial model that comes out. And then I think once it is out, the banks will make their strategies. Of course, they'll be part of the journey, but how aggressively they will position it in the market and they'll push it to their consumers will depend on that commercial model. So there's just one point on the NPSS that we are watching closely.
So Pankaj was looking at Sean while answering the question.
No, because so of course infrastructure, real time is always important, but commercially it has to make sense for a large bank to start pushing it to their customers. Same is true on the retailer side, on the merchant side, in terms of accepting that payment method. Coming to the payment gateway question, very interesting. There are lots of payment gateways now in the market. But everybody or every payment gateway is slightly different, when it comes to the capability, when it comes to the features. So it's not one size fits all. It's not that you have one payment gateway and it can serve all the needs. Some key examples that come to my mind is that there could be payment gateways that differentiate themselves with alternate payment methods. There could be local payment methods. There could be regional local payment methods, which are part of it, like KNet, like MADA payments in Saudi, Misa in Egypt, etc. So if you see, there are a lot of payment gateways that will show you very differentiated offering. Then some examples could be the fraud monitoring tools that the payment gateways carry. Of course, the capability of running those transactions successfully, what their uptimes are, and some merchants are, especially the large merchants, are looking at, let's say, installment plans, buy now, pay later options. In the coming times, maybe crypto is one of the subjects that is being talked a lot these days. So we are monitoring that space very closely. So I think as we look at all the payment gateways, they have differentiated offerings. Some payment gateways are catering to the very, very niche global customers, but they want to follow those customers wherever they go. There are some payment gateways which are experts when it comes to high risk sort of merchants. Could be gaming, could be crypto. Checkout is one example, which is part of our ecosystem here in UAE, but that is their focus. And there are then companies like Stripe, etc., which we as Network International also empower in UAE. They are focused on very sole proprietorship, fintechs, small startups kind of environment, where getting on board, getting to accept payments in 30 minutes or less than that, that is the key. You don't want to delay your business by even a day. So they cater to a very different category of target market, and hence the proposition that they offer as payment gateway is aligned to that target market. So I think that there is enough space for coexistence of various payment gateways. And in the end, of course, they will require a processor to process those transactions, to take it to the schemes and get the authorization. So where companies like Network International comes in. So last point I would say is that we are pretty proud as a company that we have our own payment gateway, or our own, we call it Ingenious. But we also work with all the other payment gateways, whether it is MasterCard, Visa CyberSource, or EPG of the Etisalat. So we work with all payment gateways to enable. So whatever the customer is looking for, we'll bring that capability. So that, I don't know whether I answered your question on payment.
You answered the question, and that gives a lot of clarity in terms of it's not one, it's actually many, catering to different needs of different customers. So there is still a lot of space for coexistence, and that's what is being leveraged by all the different providers. Okay. So that takes me to Dheeraj now. Dheeraj, all of the banks and even the providers in terms of payment gateways and processors, they're relying heavily on the tech side. And with TCS having a lot of experience into the payment industry, providing payment hub. So how do you see the next 2 to 3 years, which is going to be high value addition into the market for the payment industry?
So I think, see, 2-3 factors, right? When we say the next few factors, one of them, as we are saying, interportability and number of schemes coming out, right? So that's the key. Simplified processing is something which has to come across. So you are in UAE, if you are onboarding onto GCC, RTGS, or Buna, or NPSS, the end customer is just looking at how the payment has to be made. He is just not worried about, I just want to, as a customer, say, I want to pay this money to this guy. So that's the first step where this will be coming out, right? The next step would be, from bank's perspective, that what data I'm getting in from the channel, from the customer, and how I'm doing as interportability, which Sean also said, that if I'm moving across the rails, what is my standard which I'll be doing? And if you see from what were existing as proprietary models, were all different. Now you are coming up with standards, and ISO standard was always there, right? And that is just being valued now is more often compared to, it was there with SEPA long back, right? Now you see a lot of it coming through all the areas. SWIFT going to MX, and then then that way it gives you a leverage to continue from one rail to another very quickly. Then it creates end-to-end traceability for you from end user perspective as well as compliance perspective, right? Where the payment is going through and from an operational perspective as well, it's a clear STP, which I think in the morning Sanjay also mentioned, right? That STP is the key. So how do you ensure that the data which is coming through and it's moving out quickly without any bricks and with the exact detail what is expected, right? If you see today, SWIFT is moving to MX, but there is still a coexistence period. And you will see a lot of things which are moving here and there, that there is some transaction manager coming, some things coming up, which is partially in MT, partially in MX. So that is something which will get streamlined across in next 3 years. And more central bank systems are coming up with ISO, like NPSS, like if you see FTS was just a proprietary out of whatever we had as separated files. But now everything is moving to ISO. NPP in Australia also moved to ISO. Pay UK is also there. So that's, I think, these are the new things which will kind of streamline and give that help or push to the internal teams on the bank, with be it compliance, be it operations, to streamline that information and pass through. Anyways, the other speeds and other things will continue to grow. And the use case for NPSS, I think that's something to be seen as evaluated in next year. Obviously, I see a lot of learning coming on from India to UAE as well as to other countries, and how the use cases are coming. So we are yet to see on how the use cases will be there. They have defined that yes, P2M is there and P2P is there and all this is there. But as rightly Pankaj said, that the use case and the commercial value will come only when we see that. So that's, I think, will grow.
So you touched upon a very interesting area where ISO standards can bring all the operating model, making it easier between banks and fintech players to communicate. One such standard, ISO 20022, which is, I think, helping the payment industries these days. So that's another important element. I mean, thanks for touching that area. That's another awakening fact which is going to help the payment industry. Okay. Okay. Yeah. So, yeah. No, I guess that's a very important point. It's part of NPSS, and I actually, I'm just going back to the 2 points that the last 2 takeaways. One is the commercial model, and second is obviously standardization, right? But before I ask the question, if there are questions from the panelists, from the audience, we would come to you shortly, yeah? But I want to actually now go back to one area, and maybe this is to all the, panelists here. See, one area that, is going to be critical as we actually open up, payments the way it is, and as different use cases come up, as different types of, you actually have these commercial models evolving, regulation becomes critical, right? Compliance, regulation, controls becomes critical, and obviously the more you open up, the more you obviously have to be also watching it, right? What would you see happening in the next 2 to 3 years?
Okay. So the regulatory compliance is critical, and one example to make a point is crypto. We've all been hearing in the last 6-9 months, so much of hype, so much of news. Actually, it's not hype; it's reality. It's happening. There are 300-400 people working in large cryptocurrency companies in UAE today. I think most of the processors are getting technically ready for that day when the acceptance becomes live here. I think the regulatory environment is what everybody is waiting for. So when VARA, which is the Virtual Asset Regulatory Authority, was created, it was basically created to come out with the regulation so it can standardize. So getting to crypto acceptance or making, buying a coffee with using your crypto from any wallet that you have will become reality. And I think the regulatory compliance is going to play a critical role to define the ground rules for everybody, so that everybody is safe and everybody is playing with those rules. Otherwise, it can become, quite a laissez-faire. So I think this is just one example. Now, whether it is NPSS, what commercial model they come up with, of course, in consultations with issuers and acquirers, and then, so I think the regulatory compliance is the final, I would say, final layer to make it seamless, to make it the adoption, acceptable in the market. and also guide all the financial institutions to then roll it out. So that's my take on the.
One of the interesting ones I'm watching, I mean, I watch the regulatory stuff because it's obviously a huge part of what we have to do in terms of the work plan. But I'm sure there's going to be more. I think the crypto stuff's going to be really interesting. One of the interesting ones in Australia that seems to blow people's mind here is the government, about 3 years ago, I think, restricted the size of a cash transaction to $10,000, so about 25,000 dirham. And it's illegal to transact cash above that limit. What the payment industry bodies are seeing is the average size of a payment as cash is being eliminated, micropayments coming in, the average size is going up, but because of the AML and money laundering factors, they've had to also restrict the size of cash payments. Those kind of things start to drive that convergence at the high value payments, at the low value payments through digitisation. It's put a squeeze on cash and will just accelerate digital payments. So I'm very interested to see if that ever takes hold in a more cash-centric economy like the UAE or the US. But it was interesting when we saw that happen in Australia.
Thank you, Sean. Nitin?
Just to add to that, so the journey from physical to digital has already started, right? So you talk about, the CBDCs, the central bank digital currencies, that's standardization. Caribbean nations already adopted that. I just recently heard even Nigeria has issued one as well. And there's a think tank here to do that. So that is a big standardization, and there's inherent, security associated with it. Talk about distributed ledgers around that. So you do see that this digital gravitation happening very rapidly. The question is, how will it all sit in? I have no. But that's what's happening in most of the countries. You mentioned India as well. We've moved from really a cash economy into a more digital economy, even at the micro payment level, right? So that's happening. Even in UAE, we are seeing less and less cash and more, settlement through all the other channels. So that's a reality.
Yeah, no, I agree. I guess, I think the point you made about having some of those limits, more from pushing it up and pulling it down, I guess it has its impact. You have a take on this, Dheeraj?
Yeah, just few parts. See, wherever there is innovation in the banking part of it, I'm not saying from a customer experience, there has to be regulation. Otherwise, everybody goes his own way. And as we have seen, that regulatory compliances, be it issued by the central bank or be it issued by your compliance teams, which are anyways followed by the central bank as well, are important. But sometimes the important factor would be how do you automate those and ensure in the timely manner. So NPSS is there now. The regulatory compliance are yes, because they are yet to see the use cases. But sooner you will see more regulations. As we see here also in India as well, the value or there is a limit to the value, but there still talks about can I increase the value because I know I have a business case about trade finance. So that's where I think wherever you will see innovation in the banking space of it, you will see more regulations coming down the line. Otherwise, it will be difficult to take
shadow here. What follows the other?
Yeah.
Question.
Yeah. Pankaj, we did a payments and lending conference in Bombay 4 or 5 months ago, and actually, obviously, there was a lot of payment companies, right? BharatPay, PhonePe, Paytm guys. The regulator was there. Some banks were there. Obviously, if you heard all the guys and asked them how you're going to ever make money, it basically came down to saying, look, I'll look at the payment profile of the customers and I'll start to lend. So in essence, they all wanted to become banks, right? So anyway, it looks like that's the journey they're going to do, and they're going to burn through a bunch of cash before they get to that point, right? But I want to go back to the situation where you're already a bank, and you brought up the issue on commercials, right? So, how does the bank in this new payment framework make it more commercially viable for them to make it more interesting, right? Does it help them lend better? Maybe that's one output that comes. I'm just trying to understand that, okay, we get all this innovation in payments and we get these volumes to go up, but if everybody's going to make money from lending, right, then how do we use this, right? How do we use this whole opportunity? Yeah. I mean, you can go and
So
I'm happy to hear Sean also.
yeah, of course. You want to go?
Yeah, I'm happy to go first.
Yeah, please.
I think one interesting angle, because it is a challenge, getting the commercial model right with more participants. You know, someone's going to be eating the bank's lunch. It's not easy. But one area to think about is the data that's in payments. There's a very, very rich set of data that can be mined. One of the interesting side effects of when we launched contactless payments in Manchester for their transit network was they actually finally learnt through the payments data when their rush hour was. So all of their transit network planning, all of their infrastructure, their work schedules were geared around the kind of folklore that said rush hour is between 8 and 8:30. And through the adoption of digital payments and then the collection of the data in real time behind that, they were able to see that actually most days of the week it was 7:35 to 7:50, and they'd been getting it wrong for the last 20 years. And they could actually just monitor and adjust. So there's a lot of value kind of locked up in looking at what's actually happening in the general economy or whatever industry we're servicing with payments data that can be extracted by being the payments hub or the central payments processor. And so you can look at other ways to kind of monetize the value of being in the payments flow if you can kind of build your data infrastructure and make it accessible and real time. There's a lot of interesting use cases there. So I think we can think broadly about how we extract value from the payments and not just the sort of traditional everyone taking a clip of the transaction fees.
It's data monetization end of the day.
Yeah, no, I think the absolutely right data is critical, but as they say, a lot of headlines these are data is the new oil, but not every bank is a refinery. So, working in many banks, I can tell you that they had all the data for all the years, but to monetize that data, still there is a spam SMS that would come to everybody that there's a 15% discount on a Chinese restaurant, and you don't like Chinese, so you ignore it. So I think the ability to use that data requires a lot of legacy platforms to be changed, a very innovative, new age thinking to set in, and only then the monetization can really happen. So from theory to practical to really make money out of it is not easy for legacy banks, where the fintechs, like the example you gave in India, are doing a much better job. Now, coming to the commercial model of, if we take NPPS as an example, we are all watching it closely. It will create a lot of internal conflicts, a lot of discussions in the bank that, should we put all force behind it? Should we not? Will it cater to the regular transactions that all of us are making on a day-to-day basis at the merchants or whenever we are spending? Or is it going to unlock a very new category, which is today's, let's say, primarily cash? Is it only, for example, the first round of NPSS is focused on P2P payments? P2M will come later. So all the payments that we are today making, small transactions, let's say under 100 dirham transactions, can those transactions move to NPSS? Now that can create a new revenue pool for the banks. And they may be fine, all the stakeholders in this process may be fine to go with lower per transaction commercial revenue versus cannibalizing their entire payments business. So I think in the coming weeks and months, this will be very in detail debated within the banks, and I think every bank will come up with their own strategy, own solutions around this. So that's my
Interesting. Thank you, Pankaj. We have time for one more question, and then there you go.
Thanks. The panel was very interesting. Am I audible?
Yes.
Okay. The question is, in UAE, we know that there are a lot of blue-collar workers who are non-banked. So how does this NPSS going to benefit them? How they will be part of the entire ecosystem?
Nitin, difficult questions are directed to you.
Let me start with data monetization. See, I think one of the big initiatives on the Emirates Digital Wallet was for this blue collar. And that's probably where, even though Pankaj may have a slightly different view, but I feel that's where it should be, starting at that space where you are unbanked and you need at least some ability to transact securely. And that's where this begins. You can talk about wallets for loyalties and all as well, but that's where it covers it. And we have IPI, IPP will come in, so you will be able to see if we get the strategy right to do transactions through wallets through IPP, that's where it goes. So I don't need to be a bank. I don't need to issue checks in the future, hopefully, and because there's e-checks coming in as well, and there are digital signatures, that's your wallet. It solves I think it'll solve the problem a great deal and bring security to the blue-collar workers as well.
Sorry, Ram. Before you close, I'm just going to go back to this commercial issue because I'm going to add some...
You're going to start charging money for this.
Historical context to it. Right? So 2 points I wanted to make here quickly. This cannibalization issue you brought up. I remember many years ago when I was helping UAE banks on, say, retail banking strategy, and then you start to sell investment products. And then basically what you need to do is you take out deposits and move it, right? So that's an issue, right? How much deposits do you want to move? Issue. If you look at fee income as a percentage of income, right? Under an ideal circumstance, you say, look, if I can have 30-40% of my income as fee income versus interest income, it brings some stability to the income of a bank while interest rates move around. And the fee incomes obviously get more and more regulated, right? So there's a very tight rope here, right? So the moment when you do all of these things, you're obviously looking at every line item of fee income and seeing, what do I lose and then where will I gain or not gain. So I'm just saying the commercial piece that you brought up actually is going to become a critical issue in determining how fast you go down this path. Yeah. Anyway.
No, absolutely. I think the observation is bang on. And that is where I think the regulator here is smart. They are working very closely with all banks, with all acquirers. There is like almost a weekly, cadence that we have with them. And they are taking everybody's view into their strategy. And we are all hoping that we will be pleasantly surprised with the pricing mechanism that is going to come out. And hopefully it will address the large cash pool and not only just create another alternate payment method, versus credit cards or versus debit cards. I think that is where the success lies. If it just moves transactions from a card type to an instant payment, then nobody wins in the game. It won't solve the problem that it is designed to solve.
So it moves the revenue from the card providers to the government, no?
So let's see. Then the banks won't push that hard. So it's a very interesting situation that it is emerging. And I think once the pricing is out, once the commercial model is out, a lot of banks will look at building their strategies, and that will be very interesting to see how, especially the large banks like Sean's, react on the model and the opportunity.
See, just an example, if you see India, their retail payments, how do they earn money? There it is very much open to every fintech to join UPI, right? But here you see a difference that you can't directly join as a fintech, but you can join as a wallet or a bank, right? There the complication was much more for a commercial model, for a bank to play a role. Here I think central bank has given some leverage out of it. They've not involved directly all the fintechs that you go and join this network, but they've allowed the banks to take that, onboard that fintech and use that. Other part, whatever you see in India going on, it's all data driven. What you get data, you upload into a marketplace or get benefits out of what you can offer otherwise. I don't see from India perspective, at least retail payments are not earning that revenue from a banking perspective. Here, yes, we can see how it works through, but typically should be like that, mostly.
Excellent. Thank you, panelists. It was a very interesting session, considering it was after lunch.